Okay, let's walk through creating a trade plan. First topic we want to cover is the fact that you are running a real business. And when you run a real business, there's several things to take into consideration. First of all, what vendors are you going to use? Are you going to use prop firms? Are you going to do a cash account? Are you going to do a combination thereof? Now, I do encourage you to be careful of spreading yourself too thin. Don't get accounts from 3 different prop firms, in my opinion, and try to trade them all. You are increasing the difficulty of the dive. So figure out, do I want a prop firm, take out a cash payment, and then fund my cash account? Do I just want to start with a cash account? Do I actually just want to start with a simulation account and then move to prop firms, then move to cash? Do I want to start with simulation and then move right to cash? Now, when you do the simulation, just to give you a little tip here, set the same risk parameters as you would with your cash account. In other words, in your cash account, if you know, hey, I'm only going to trade up to 3 micros, and if I lose $300 on a day, I'm done. If I lose $500 on the week, I'm done. Make those same risk settings in your simulation account, okay? So what vendors are you going to use and what combination thereof? What is your plan for progression to getting to a cash account? What are your hours of operation? When should you be trading? The longer you have on the chart, the better you're going to answer that question. In other words, are you a better AM trader than you are a PM trader? Do you trade better on Tuesdays and Thursdays? Do you stink on Fridays? Should you avoid very specific days such as CPI, FOMC, non-farm payroll, option expiration, the day before option expiration, the day after a holiday, a half day? Should you avoid all of those days? It's real tempting to come in and say, hey, I'm just going to see what happens today on non-farm payroll. Well, is that really a smart plan? Should you go ahead and put on your calendar, you know you are going to miss every non-farm payroll for the rest of the year? What about the day before non-farm payroll? I'm just going to take that Thursday, Friday off. Once a month, I have it off. What about option expiration? What about the day before option expiration? These are days proven to hurt traders. How do I know? Because I've ran a group for years and I get their feedback. So what are the best hours of operation for you? Now, this is going to go in connection with your entries because you might say, I'm going to trade the morning. I'll come back for the silver bullet hour looking for just one entry. And that one entry is going to be this. And I'm only going to be willing to risk a portion of the morning profit or a portion of my weekly profit. Really dial in your hours of operation. Don't come and just say every day I'm going to sit down and watch price action and see what happens. You could. It's going to require additional discipline to understand I don't like this price action, therefore I'm not going to trade. Or you could just remove yourself from the chart. What instruments are you going to trade? If you have a cash account, say with like Tradeovate, you can specify exactly which instruments are allowed. For me, that's MES. I don't allow any other instrument to be traded in my cash account. I don't want to get a wild hair and go, man, I really love where NQ is. And all of a sudden I go trade NQ. And then what is your why? Why are you in this business? And I'm not kidding. For me, my why is I need to have enough money that I know my wife would never be put in a nursing home. That's a big why. I want to have enough cash on hand and dividends coming in and everything else where I know when I pass, and I will probably pass before my wife, that she is taken care of until the end of her day. That's my big why. If I over leverage, I enter a stupid trade, I move my stop loss, I am taking that away from her. And that's a big why for me. What is your big why? Entries. You need 1 to 4 core setups. The more setups you have, the better you need to be with those setups. You could trade just one setup, one time frame with one instrument 3 days a week. And that's your trade plan. Nothing wrong with that. But what are your 1 to 4 core setups? And then I want you to take screenshots of those setups and include it in your trade plan. What does that look like? What is the picture perfect entry? This is what I want to see every time before I enter the trade. And yes, these unicorns actually exist. Here's screenshots. Bad trades. Where do you hurt yourself? Which trade are you instinctively knowing I shouldn't take that? What are those C-level and D-level trades? Let's remove them from your repertoire. Okay? You might have a core setup that you like, but I don't like it under this condition. You need to know that. Have it clearly outlined. I am looking for this, period. End of story. Timeframes. What time frame are you willing to trade that? Are you trading the 30-second chart? 1 minute chart? 3-minute chart? 30-minute chart and you're swing trading? What are your preferred time frames? When can you drop in time frames? Ever? Map it out as if you were going to hand this trade plan to a new trader that came into your business that you hired, and you said, here is our trade plan. Here are the setups. Here are the conditions. This is exactly what these setups look like. These are the trades we don't take. These are the time frames that we trade, that we're looking for these trades during these specific hours of operation. On these specific days, we're looking for these trades. Outside of those hours, outside of those days, outside of these setups, we don't trade. Risk. You have to accept the risk. Every trade that you enter, the outcome is unknown. Now, with our system, I know over 100 trades what my outcome is going to be, but do I know the outcome of this one specific entry? Absolutely not. You must accept that. Therefore, you have got to manage risk on every single trade forever for the rest of your life. A trader who cannot manage risk will not be a trader long. You must have a stop loss in. You need to know where you're wrong, and you need to know that every single entry, although it could be picture perfect, just like the ones you screenshotted, it doesn't work in this case. Maybe something was tweeted. Maybe a rocket was launched. Maybe a tsunami just hit. Who knows? Every trade has a risk of being a full loser. Some whale somewhere could decide to go opposite you at the exact same moment. Anything can happen. Know that every single entry could be a full loser. So therefore, enter it protecting that downside. The goal is to keep your powder dry so you can trade another day. The leverage metrics. I give this for free to everybody. It's in the Foundations course when you register. Of course, it's in the training at the Core Strategy Academy. This is outlining exactly how you're going to lay out your risk, your daily loss limit, your weekly loss limit, how much am I willing to risk per trade, how many losing trades would I want to have before I call it quits. All of that is in the leverage metrics. Please make sure you have filled that out. Are you going to follow the 3 contract system where we enter with 3 contracts with a limit order? We see all of our trades coming before they happen. We map out all of our trades before they happen. You enter with 3 contracts. You take one off at a certain profit, another off at a certain profit, and then you keep a runner. And you keep that runner until you have structure. Then you stay behind that structure, and we follow that runner. We regularly get 10, 20, 30, 40, 50, up to 100-point runners with our 3 contract system. Or are you going to enter with 1 contract and add to your winning trade? How are you going to enter? That is part of your risk. Yes, you could have your core setup, but how are you going to manage the risk? How much risk are you going to put on the table? And then pledge to yourself that you will never, ever make things worse. In my opinion, good traders have small wins, small losses, and big wins. They never, ever have a big loss. If you could take back your 5 largest losses, would you be in a better position today? Where you knew you shouldn't have kept adding to that trade, but you got drunk with trading, you got drunk with leverage, you're now desperate, you're praying, please just get me back to break even. You should never, ever be in that position. If you're ever worried about a trade, you leveraged too big. You want to up your leverage? Add to a winning trade at a new entry point. If you weren't already long, you would have went long. So you add to your winning trade at the next entry. And that happens on trend days, which happens 10% of the days. 10% of the days you can get into a runner and keep adding to your winner and have a monster day. The other days are going to be small wins and small losses. It's okay. Risk is absolutely important. Once again, if you can't control your risk, you won't be a trader long. To me, the final component of a great trade plan is making sure you have a community of traders around you that support you. It may not be my group, and that's okay. But you do want a community where iron sharpens iron, preferably where you're trading the same charts, marking the same levels, and taking the same trades, because it's much easier to support each other when you do that. I've been in groups where people took trades for the most ridiculous, crazy reasons I've ever seen in my life, and I go, you know what? This doesn't work for me. I want a group where we're all trading the same trades on the same chart, looking at the same levels and taking the same entries for the same reasons, because then we can refine that and get it even better. So I encourage you to find a community of like-minded traders. For example, we don't trade NQ. If you want a group of NQ traders, I'm not it. Why? Because I found ES performs so much more precise for our system. That precision is worth just trading ES and waiting for my trades. So on the business side, who, what, when, where, why? That is the goal of that section. Who are you using? Who are your vendors? What instruments are you trading? When can you trade? Where are you trading? What's your workstation? Are you going to trade from your phone in your car? Are you ever going to trade from your phone in your car? That should be in your business plan. And why are you trading? Is it for your wife, for your husband, for your family, for your own future? You might be 50-something years old and you have 0 saved in retirement. Maybe that's your why. For the setups, that's what the Core Strategy Academy is for. That's where you get all the training and you learn how we draw our levels that bounce. You get our suite of indicators that helps you, and you must be journaling. You must be journaling. You get a trade tracker and trade journal template and get a free Airtable account in our group, and you will have a great trade journal. No reason to pay anything additional for another service to track your trading. Use our trade journal and tracker. And by the way, it's yours free for life. Once you're a member, even when you unjoin, you've got the template. It's my gift to you. And then on Zoom, we are continually reinforcing our core trades and which trades we should be avoiding. You're getting constant reminders of what that looks like and what the price structure looks like and what our next trade is, because I'm always mapping out where's our next long, where's our next short, based off everything we do in our group. On the risk side, you must fill out that leverage metrics, and that might need to be revisited every month or so. Mental training. Every day in our group, before the market opens, we basically are listening to an audio book. Usually it's about the mental game of trading. And once again, on Zoom, we are reinforcing the good principles of risk and trade management, helping you stay in trades longer. Because you get into a trade, it moves your direction really nice. You're itching to get out. I'm itching to get you to add. I'm itching to get you to stay in the trade, helping you manage that 10, 20, 30, 40, 50 point runner. So we're reinforcing those good risk protocols live on Zoom and inside of our Discord group every day. And then for the community, well, that's where the daily Zoom comes in. The Discord comes in, and I encourage you to please participate in any group that you join. Become an active member, even if it's just liking post or saying, hey, thanks for posting that. Oh, as you get deeper into that system, you'll be able to participate more. Now, this encompasses, to me, a good trade plan. And one of the keys to this trade plan is knowing that it's a living, breathing document that will need to be revisited over time. How will you know what to change in your trade plan? The answer is so simple, because you have been journaling every day. You've been journaling every day. You've marked certain days as important in our template, and you get to see those important lessons. Which lessons are continually being mentioned? Which trades are continually giving you trouble? Which trades are just banger for you? Take those journal entries and the trends that you see in your journal entries and use those to adjust your trade plan. This is a living, breathing document. Get out of the house, take your laptop, go to a coffee shop, go to a cigar bar, sit down and work on this. If you don't have a trade plan, you don't have a plan for success. You are just winging it. Winging it never works. So take all of those components there, the community, your business structure, your risk, and your entries, and create a trade plan for you.